Welcome to the CoreLogic RP Data update on housing market conditions for April 2015. The first quarter of 2015 has seen capital city dwelling values rise by 3%, which is the highest rolling quarterly result since August last year. The latest results take the annual capital gain across the combined capital cities to 7.4%, which is well below the peak from April last year when dwelling values were rising at 11.5% per annum. The strong growth over the first 3 months of the year are almost entirely attributable to conditions across the Sydney housing market. Sydney dwelling values were up 5.8% over the March quarter, and the annual rate of growth has rebounded to 13.9% after drifting lower over the second half of 2014. Melbourne has shown the second highest rate of growth, but is a distant second to Sydney, with dwelling values up 5.6% over the past 12 months. The remaining 6 capital cities have all seen annual growth of less than 3%, with Brisbane values up 2.7%, Adelaide up 2.2% and Canberra up 1.5%, while Perth, Darwin and Hobart have all recorded subtle falls in dwelling values over the past year. Investors have continued to comprise a larger portion of the housing market demand, with the value of newly originated investment loans now outweighing owner-occupier loans over the past 6 months. The rise in investor demand is well and truly on the regulator's radar, and we expect investment demand will be curbed over the year as lending conditions tighten for this cohort of the market. With interest rates potentially moving even lower over the year, the Reserve Bank will be looking towards macroprudential measures to cool the housing market, while low interest rates aim to stimulate economic activity and bring the Australian dollar even lower. Thanks for viewing our latest housing market update. Of course, you can always find fresh and interesting research on your local housing markets at our website and research blog located at www.corelogic.com.au.